Good morning. Happy Monday. It is September 18th, 2023, and let's dive into this week's Mortgage Minute. So last week in review, first thing is consumer inflation. In August, the Consumer Price Index, aka the CPI, increased by 0.6%, which is in line with expectations. Now, on an annual basis, CPI went from 3.2% to 3.7%, but this is still relatively low. Core CPI, which excludes food and energy costs, rose up by 0.3% with an annual reading of 4.3%. It is worth noting that this increase was driven by surging energy and gasoline prices, while food and shelter costs remain stable. Keep in mind that used car prices might rise again if the United Auto Workers strike continues to affect new car supplies. Overall, while annual inflation ticked up, it's partially due to a lower figure from last August being replaced in the calculations. The New York Fed President John Williams noted that shelter costs could lower inflation further if reflected accurately. Second thing to look at is home prices. So CoreLogic's home price index showed a 0.4% rise in home prices from June to July, with a 2.5% increase year over year. CoreLogic forecasts a 0.4% increase in August and a 3.5% increase for the year. Zillow also reports a 4.5% increase in home values since the start of the year. These increases highlight the continued growth in home prices, making homeownership a strong investment still today. Now, if you look at jobless claims, initial jobless claims rose by 3,000 in the latest week, and continuing claims increased by 4,000. Also, keep in mind that initial jobless claims, while low, may have been affected by a Labor Day holiday. Finally, it's important to watch for sustained rises in the coming months as the Fed considers further rate hikes. Finally, upcoming this week, the Fed meeting begins tomorrow with the rate hike decision and statement coming out on Wednesday. It is anticipated the Fed will pause rate hikes at this meeting, but their comments will hold significance. The Fed's actions will determine the direction of interest rates, raising question of when they'll not only pause, but potentially cut rates. In a Financial Times article, a Chicago School of Business survey involving 40 economists reflects 90% of them believing the Fed has more to do. Half expect one more 25 basis point hike, and 35 anticipate 2 more hikes, contrary to market expectations of a pause this week. Of course, the Fed's comments this week will shape future market direction. If you guys have any questions, please put in the comments below, reach out, whatever is easiest for you. I hope you guys have a great week. Crush your goals, crush your numbers, and if I could be helpful in any way, don't hesitate to reach out. Have a great week. Take care.